Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from beautiful Denver, Colorado today. Pleased to be joined by my friend, fellow Schwab coach, Rachel Dashiell. Good morning, Rachel. It's good to see you. How was your weekend?
Good to see you as well. Good morning. My weekend was great. It was full of 85-degree weather here in Greenville, South Carolina. So it was a little preview of summer.
Excellent. Yeah, very similar here in Denver. Got a little bit warm as well. Way too warm, if you ask me, for a mid-March time frame. You shouldn't be breaking 85 too frequently in March in Denver, but that's what we got. And it's kind of funny because I liken this 85-degree weather late March as kind of akin to don't get too excited, right? Because it is March in Denver. Coming up, April, our snowiest month, inevitably. So I'm trying not to get too far head over skis. It may apply to this market, Rachel, because we've got a little bit of bullishness this morning, and yet I'm always reminded that one day does not necessarily make a trend, does it?
Nope, not in weather patterns, not in the market either.
So we're going to talk about what transpired this weekend, what shifted in the market. Perhaps we'll look at a bunch of charts as we always do, but I'm glad you're all with us this morning. We're joined by Brent Moores in the chat. You can say hey to Brent. He'll get to comments and questions. Rachel and I are unable to, but we're going to keep an eye on things for you as always. Please feel free to post in there for the duration of our show. Now, additionally, if you're not already doing so, follow us on X, Brent Moores, CS, Kevin Horner, CS, and Rachel CS. The best place to find us when we are not hosting classes for you here. Let's get to our disclosures, and then we'll get into the fun stuff. So first of all, remember that our discussion here is exclusively for your information and your education. We are not here making recommendations nor any endorsement for a specific approach to trading the market. What we will do, however, is utilize technical analysis as we review the areas of the market, indices, sectors, industry groups, etc. Remember to think of technical analysis, though, as simply a complementary piece to all you're doing. So it's one decision-making piece for us. It is not the entirety of your decision-making puzzle. So please keep that in mind as we're working through things here. And a last thing of note is that we work in our paper money version of the Thinkorswim desktop application. Remember, there are some discrepancies between what's available in Thinkorswim paper money versus the live money version. So bear that in mind. Now, our agenda today will stay similar to usual. We'll do our top-down review. We'll start broadly, hitting the major indices, working our way through the areas of the market that are all on your minds, everyone. Certainly, we're going to discuss oil and a multitude of others, but we'll try to get to some stock in the news near the conclusion of the discussion if possible. So with that, let's pull up the S&P 500 here. Get started on our pretty weak finish that we actually had on Friday, Rachel. We had that ugly finish, and this is not all that uncommon, but it's helpful to be reminded, I think, that sometimes when we make these extended lows, sometimes they end up being like a flush out move to a certain extent, meaning you make your lower low and then suddenly you get snapback opportunities. We might be witnessing something like that as we speak right now.
Definitely. And I think it's kind of notable as well because I heard this stat this past week, and it said that 71% of the time that we trade below the 200-day moving average within the S&P 500, we typically reclaim it at least for a short-term bounce within 10 days or so. So it's kind of notable that we're getting close to that quite a bit. We saw a little bit of a flush out of support, obviously below the 200-day. We saw horizontal support really breaking on Friday as well, right around 65.50. And it looks like today we're just having a little bit of recovery from that as well. Even as the market was coming off of some of those extended levels as far as momentum too, you even see down below, we saw that bounce from the 30 oversold level within the RSI too. So again, kind of all things mixing together for this recipe for this short-term bounce that we're seeing.
Well, yeah, the recipe for the short-term bounce is a little bit of price action followed by some potential commentary and or news. We did have a little bit of a presidential tweet this morning suggesting that there was some work being done between Iran and the United States, in terms of discussions, and that, of course, discussions always give the market some hope and some optimism. We'll see if that has any validity, depending on who you listen to, of course. The administration suggesting that this is the opportunity we were hoping for, and of course, Iran kind of denying that. So take it as with a giant grain of salt here, everybody. And this is ultimately what I wanted to point out, Rachel, which is once again, we can't look at short-term price movements necessarily and allow them to color the overall picture that we are seeing in the broad market. Sure, we could be getting a bounce due to oversold conditions, but Rachel, oversold conditions does not mean that we're ready to get right back to what the market was doing prior to conflict here. Be patient, be cautious. We have to be at least a little bit cautious here heading into this. I mean, again, we should take our opportunities where we can find them, but nonetheless, it's only a day. It's only one single tweet, right?
Exactly. Yeah. And one day, like we said, does not make a trend. We can see obviously the trend has been bending. The overall market has formed this rounding top for the last 4 to 5 months or so. And that's the environment that we've been in. And then under the surface as well, we've also seen kind of that weight of the evidence really stacking up as well, where we've had breadth kind of getting close to like washout levels here, where market breadth, that market of stocks is just getting weaker and weaker, that we're seeing below the surface and obviously only showing up so much on the index. And then we have some of our more risk on cyclical groups like tech, consumer discretionary, some of those that are still at relative lows versus the S&P 500 as well. So I think that's more of the long-term evidence that we're seeing here. But like you said, yeah, one day does not make a trend. We kind of have to take all of this with a grain of salt.
I think so. Yeah. Let's pay attention short term to the fact that we're through the high we made on Friday. That can be the potential getting us going, right? So I know it sounds like I'm talking out of both sides of my mouth here, but we have to take a balanced approach as best we can. And the first note is that we are through Friday's high. So when we think about that, Rachel, it's always can be helpful to look into something like your intra-period charts, see if you can validate any of the original or the initial move of the morning. Intra-period on the SPY or SPX, excuse me, before we move into the NASDAQ 100. I think the big takeaway here, Rachel, is the gap of R1 on the pivot point. Can you talk to us a little bit about that for a short-term trader's viewpoint?
Yeah, so that gap above the resistance level 1 on the pivot point is definitely noticeable. We want to see if that gap does not get filled within the first 15 minutes of trading, because a lot of times when we do see a gap up like that, if it gets filled in the first 15 minutes of trading, that is obviously an exhaustion gap or something notable like that, which may say that, hey, this trend, at least in the short term, is a little bit more exhausted. But I think the fact that it's gapping up above that resistance 1 level, if it holds that here for the next few minutes or so, it may continue its move up towards that resistance 2, that 66.46, kind of around that level or so.
Yep. Good call out. And I'm going to actually duplicate my line, and I'm going to put it to the highs we had made on Thursday afternoon before reversing course all day Friday. That becomes another important level. The fact that it's coincident with that R2 also stands out. So those are some areas for us very short term, intraday today, to look towards. If able to clear, bulls are going to feel like we've got the opportunity for maybe a longer term window bounce than what we're seeing here initially this morning. So we'll see to what extent that continues. I imagine if I keep it on this intra-period, sure enough, our NASDAQ 100 is going to look pretty similar. I've got a bunch of lines drawn in. Let me clear this out. But ultimately, Rachel, same thing associated with the R1 on the open. Gapping these initial pivot levels is wonderful as a starting spot. But again, we've got to make note of our most important levels, the ones we got to get through to continue feeling validated on our bullish viewpoint here. So short term, you're looking at R2, very much in line with everything we just said about the S&P. And Rachel, boy, these charts look so similar, don't they? Look at that NDX. Intraday, new short-term low, took out the low from November, and yet we are bouncing and through the high from Friday already. Now, let's do this,
so that's
Rachel.
what it appeared.
Oh, go ahead. Sorry.
Sorry, I think we're actually I'm getting a little bit of muffled connection from you. I don't know if it's from my side or your side, so it didn't mean to interrupt there. I've kind of heard a break there.
You tell me what you're seeing relative to the NASDAQ, at least on the daily here.
Okay, awesome. Yeah,
Still getting a muffled connection.
On the daily, obviously. Okay, thanks. Okay, so as far as looking at the NASDAQ 100 index, we're kind of seeing the same similar thing that we saw in the S&P 500 too, where we're seeing a little bit of a short-term bounce, trying to reclaim that 200-day moving average. Still, we saw that the market held that horizontal level of support. And I think something notable here is we're also not seeing RSI getting to really those oversold levels. We have been in more of a bearish regime over the last couple months, I guess, speaking from a momentum perspective. But I think one of the major to really kind of consider is, yeah, our short-term trend is still down. We can see that evident with the lower highs, lower lows here. We haven't made a higher low. We haven't made a higher high yet. So a lot of the similar things that we're seeing kind of stack up as far as what we just saw in the S&P 500 too.
Yeah, I agree. This is what I was looking for. The 5,200-day look at the moving averages. The 20-day makes the chart look a little muddied right now because we've been below the 20-day, but we've been kind of through it. We've been volatile. But the 50-day on the NDX sure stands out, doesn't it, Rachel? I mean, well below the 50-day now, back to February 3, the new short-term low. But Rachel, would we be able to call this RSI price action? Could we more or less call this either a divergence or, if nothing else, just a retreat to support in both price and RSI?
Yeah, I think that's what we're seeing a little bit. I guess kind of first to note, yeah, we used that 50-day moving average as quite a bit of resistance on this short-term trend on the way down. And then as far as RSI, we saw price making lower lows, and the RSI is still making the same level of lows. So that's a little bit of a bullish divergence there, I would say, just because it's not really confirming anything there as far as the RSI making lower lows. I guess maybe more of a neutral type of divergence, I should say, because if it was more of a bullish divergence, we'd see RSI making higher lows in that environment. But I do think that is notable here that throughout the weakness that we've seen from the index level from a price perspective in the NASDAQ in technology, we're still not seeing lower lows in momentum. So it's kind of like hanging there in limbo, maybe suggesting that a possible reversal could be near, or we may see some sideways price action here at these levels.
Okay, well, we wouldn't mind a little bit of sideways. We'd love a bounce, but if we were taking trend into our view here, I think we have to, as bullish traders, consider the most recent action to be the most valid in terms of trend. So any price level that would allow us bullishness, a lot of traders we've already held through or are currently through the high from Friday, so we've got that potential hold opportunity today. I say potential because it's way too early in the day. But if we cleared the 200-day, maybe cleared the high from Thursday, Rachel, does the 50-day become a target for short-term bulls? And should they look to be targeting short-term peaks to exit any bounce trades here just based on the underlying uncertainty of the overall situation in the market here?
Yeah, actually, I would say yes, definitely in this case. So once we get above that first level of resistance, even that high from the previous day, that 200-day moving average, obviously that next level that's going to be upon the horizon for traders is going to be that 50-day. But like you said, with the type of market environment that we're in, it's kind of more of that environment where traders are being a little bit less aggressive as far as trading breakouts. They're being a little bit less aggressive in the current environment on buying pullbacks, things like that. So a possible short-term bounce, even if we see that to the 50-day, that may give traders another level to probably take some profits at and probably sell into strength from that perspective, just given the market environment that we're in.
Yeah, I definitely agree with that. I think the reminder here is we haven't had a lot of bullish follow through, and so follow through that we get, we need to be cautious to a certain extent, right? There's definitely been some trend that will indicate struggles on the way back, and bounces could be short lived. So if you're feeling like trading these short-term bounces, great, but trade them for what you get into, meaning if you're planning it as a trade it as a trade, look for your exit opportunity, consider resistance to be the opportunity to take profits, and until the market tells us otherwise. Because when we look at what's been going on, our bounces in bullish nature have been short-lived, limited follow-through. So we really need to pay attention to that. That's ultimately a trade management situation as much as anything else. Rachel, we are getting a nice little pop here percentage-wise in the Russell, but the Russell's also our group that has struggled the most coming off of its peak. We had some leadership from the small caps, but yields had been climbing. That's been putting some pressure on things. We had a hotter than anticipated PPI last week, further pressuring small cap positions, and the dollar rising, leading to higher yields, leading to higher inflation potentially. So we've had all of this like perfect storm stuff really depressing small caps of late. What are you seeing in the chart here?
Yeah, Kevin, I would agree with you. There's a lot of different intermarket signals that we're seeing really align up. That's really shaping this market environment, and especially with small caps too. And I think the biggest catalyst here with seeing a little bit of bounce in the small caps today comes back to overall energy prices, because we know energy prices are so linked to rates. We've seen that they have put pressure on rates. Obviously, the rates have been moving up in the near term, kind of breaking out in this case, and we are getting a little bit of a break or a little bit of pullback in rates today, which is definitely that catalyst for the small caps to get a little bit of a bounce, because we know that they carry a lot more debt. We know that they're just structured a lot different with some of those companies than a lot of large cap companies, which are very cash flow heavy and don't carry as much debt. So I think that's going to be the largest link here, is just what are energy prices really doing? What is that pressure that's going to be placed on rates here? And that's really going to be the catalyst, I think, for small cap growth really going forward.
Yeah, let's go ahead and bring in a chart that we've been kind of watching here on this in this class, and I've been posting it on X, and we're using future symbols here, everybody. So, of course, just a reminder as it relates to futures that we're not touting futures trading in any way, and that futures are certainly not appropriate for all traders. Make sure you're familiar with the risk disclosure statement for both futures and options. You do need to be approved before trading them here at Schwab. The thing that I'm watching, Rachel, is just this relationship. The inverted nature of that S&P on the left, and then on the far right is the oil. As oil drops, S&P rallies. VIX falls when oil falls. So there's a pretty clear delineation and relationship here that can kind of keep us in line with expectations. And the lower we push the VIX, the better, of course. If we can get the VIX back under 20, I think some bulls will start to feel a little bit more enthused. But ultimately, it's been short-lived spikes. And granted, headline is why we're seeing oil come back. But maybe the reminder is as good a move as we're seeing in oil and the positive reaction out of the broad market initially this morning, Rachel, even with an end to conflict, we have to remind ourselves that the change in oil might not be the kind of thing that reverses course quickly, because this is a scenario that is more likely to play out over an extended period of time, even with a positive conclusion to the conflict.
Exactly. Yeah, and that's something that we've seen too. I mean, obviously you pointed out the strong negative correlation between the overall market, or just the S&P 500 in this case, crude oil, and we're seeing that relationship really take shape here, where that correlation has dropped off so much that because crude oil is down what, 9, close to maybe 10% today, we're obviously seeing that little, it fuel that bounce in the overall equity market. But I think it has been notable that with the prices of energy prices like oil and things like that, we have seen energy as a sector lead for the last, what, 3, 4 months now. And so I think energy stocks and that sector is going to be our biggest clue going forward, because if energy prices, or I guess if energy stocks maintain these levels, it may still really speak to what the underlying trend in crude oil is, just to see if like that is sustainable. So I think that's going to be the biggest signal here between the relationship between these two. If oil prices can stay elevated, it probably comes back to, hey, what is the overall energy sector doing, and what are these stocks pricing in as far as that type of market?
Indeed. To say that this is going to be to suggest that the conclusion of conflict is going to immediately turn the market back the direction that we want, I think that's the discussion point we want to bring up here, is that it's not likely to be a quick fix regardless. Let's take a look here as well at our semiconductors. I've got apparently a pretty appropriate white line drawn in there, Rachel. I think this is an important level. We have managed to come off of that low we made on Thursday. Yes, Friday's price action happened to not make a new short-term low, and now we're trading through the highs a little bit. But ultimately, it's this ledge of where we've rallied over the last 3 weeks into about 79.50 on this index that has struggled, and that just happens to be coincident with the 50-day moving average. But is there anything more we can take from this? I mean, ultimately, it remains an uptrend, and yet we're struggling below the 50-day pretty obviously.
Yeah, I think those lines are drawn perfectly there on that chart, because I know semiconductors, obviously, they're a huge part of tech. We have seen that weakness in software, but it is notable that semiconductors are still kind of holding up there. They're obviously still battling with that 50-day moving average as they form this. It looks like almost like an ascending triangle type pattern that we're seeing here. I think it would be I think it would give them even more momentum as a group if they could make this way through that $8,000 level, or not 8,000, but 8,000 point level, I should say.
Right.
If they can break that 50-day, and obviously, since that's a kind of like a confluence there of horizontal resistance, the 50-day is shaping up there. Obviously, the market has shown that that's a crucial level. So yeah, in the short term, we are seeing a little bit of repair with the higher lows being made. We just haven't seen the higher highs yet. So a higher high here would give us evidence that, hey, we do have some repair here taking shape. We may see a reversal here in this short-term trend.
So it gives us, if nothing else, as we often say, Rachel, it lets us know where we can set risk properly. If you want to be bearish based on all the action of the last 3 weeks and the failure at the 50-day moving average, that can make sense for a trader. Risk reward favors perhaps the bears at this area, but a bear would also be looking to cover any bearish positions. If we were to close above the 50-day, maybe that's a 1-day window for some of you. Maybe that's 2 or 3 consecutive closes over the 50-day for some of you as well. Always need to know what is it you define as confirmation. That'll help you make your trade a little more efficiently, hopefully a little more effectively. But ultimately, we know that it's likely to shift a little bit. The bear bull viewpoint changes over the 50-day moving average. So that still remains to be seen. We often say it, don't we, Rachel, that technical analysis doesn't tell us what's going to happen next. It just helps us to set our risk more properly.
Exactly. It's not prediction. It is more about reaction. So how do we react to the price action rather than predicting it? Because I know you and I, no one else has a crystal ball. So that's why we use it as a tool in our tool set here.
That's right. Mine is a pretty cracked crystal ball if I were to go that route, everybody. Let us move into a quick look at the sector relationships, because I saw something on the chat that made perfect sense, and that, of course, is a day like today is an always, and actually the negative days are really the ideal ones to really look for your relative strength, but it's not a bad idea to do it as well today. We're seeing leadership today from discretionary, from industrials, from technology and metals. So kind of interesting. Materials, excuse me, that is. Materials have been pretty well beaten up over the last few weeks with the rising dollar in particular. I do want to look at precious metals with you all, but Rachel, when you're looking around here, maybe the reminder is that we've got some opportunities in some of these really beaten down groups, and further, in difficult markets, volatile markets with an elevated VIX, and I do mean elevated to the level, remember, we've generally seen the VIX hang out in that 13, 14 area, which tells traders lots of comfort, stay long, etc. But we've really seen an elevated VIX all year, and it's not always spiking to 28, 30. Those spikes are generally short-lived. It's the holding of the elevated 20 level or so that just reminds us that with volatility comes big swings. And even though we've been beaten down a little bit, we could be getting big swings to the upside that could only take us to potential areas of resistance. I wanted to look at any of these here with you, though. I wondered if one of these were at the forefront for you, any particular sector you wanted to maybe take a look at.
I think particularly, especially as we look to see if this bounce really plays out, especially since it's just kind of occurring on this 1-day reaction to news. I think the biggest thing that folks will want to pay attention to is more of these risk on type of groups that we've seen that have lagged on a relative and absolute basis. So likely consumer discretionary, information technology here, because typically when we are in still earlier healthy cycles of a bull market, these are two sectors that tend to lead, and we've seen quite the opposite in this current environment. So the fact that those are finding strength today as the index is kind of seeing a little bit of a bounce here, this is probably what we want to look at to see if there is continued strength in some of these more cyclical risk on type of groups.
Okay, so when you're seeing discretionary, we're already getting these hold scenarios, and I know bulls are grabbing these early on. They want, because we've been thirsty. It's been 3 weeks of struggles. Bulls are looking for every chance to get going as early as possible. Hold move initially here in discretionary. Same thing in technology, trading through the high we made on Friday. And if that's the case, that's a low day in our pullback. Rachel, I got to call this out. I mean, that's not insignificant bullish divergence is what I'm trying to say with that really bad finish we had on Friday. So, there's a couple of ways that traders could go about it, but if you're feeling optimistic and you're looking at a bullish RSI divergence and a new short-term low and a potential hold today, Rachel, does this maybe give bulls a little bit of confidence to step in here?
Yes, definitely so. I think you read my mind there as far as looking at the RSI, because I guess we'll kind of mention momentum first. So we saw price making lower lows, but the RSI was making higher lows. So obviously that bullish divergence there. And when traders see that, they want to relate back to the price and say, okay, I have seen this slowed momentum to the downside here. Maybe we're getting close to a bottom, or maybe a bottoming formation is crafting out. But then traders need to look back at the price action and say, okay, well, is price confirming that? Have we seen a decisive move in price? And I think today, it looks like that Friday could have been, if price closes kind of at some of these levels that we're seeing, it almost looks like Thursday, Friday could have been like a bear trap in that case, where we see just a slight breakdown, high volume there, breakdown from support, and then we quickly see that support or new resistance being reclaimed, and price quickly reverses in the opposite direction after it's already stopped everyone out or closed everyone out of that short-term trade. So yes,
Yeah.
that hold will definitely be one of those things that traders will be watching throughout the close today.
So one of my reminders for you traders, when we get moves like this, if the trader is feeling bullish, the process may not be, hey, can I be a comfortable buyer here or not? It might just be, I need to be a buyer, but I'm going to massage or manage expectations through position sizing rather than ignoring what I see. So that is to say, bullish divergence, new short-term low in price, but a higher low in RSI. Some traders would look at this as an opportunity to get started and see if this is a good bounce level. And instead of doing it with a full position size, they do it with 25% of what they normally would, or even just 10% of what they normally would, because they're feeling a little bit gun shy based on how the market's been treating them lately. That's fine. What a lot of traders will do is just use proper position sizing to get them comfortable, to allow them to participate, and then see what comes. And of course, in this instance, if that were the case, many of those traders, Rachel, are going to wait to add to any bounce trade like that until your continuation is visible. And that would mean a trade through the downtrend line for a lot of traders, right?
Exactly. I think of it a little bit like fishing, because in this sector, like it's kind of been in a sit on your hands type of market, where you're just kind of waiting for that bite. And so like right now you're getting like that first kind of signal of that bite on your hook there. So like it's not time to reel everything back in right away. You may just kind of want to wait for a little bit more of a pull in that case before adding size. So I think the biggest thing to look for a true possible confirmed reversal is traders may be looking for a continued move of this bounce, take a little bit of a nibble here, but then take a little bit larger of a conviction when we make our way past that 200 and that 50-day moving average, where we've actually made a higher low, higher high to show reversal.
Absolutely. Yeah. Reminder, what Rachel and I are talking about here is really the process of confirmation, comfort in adding to winning trades. It is not to suggest that the trader needs to consider one single close over the downtrend line as confirmatory of a new trend, meaning define that for yourself. Some of you are going to want to see one close over the 50-day, a second day above it, maybe even a third day above it before you're going to validate this as a legitimate breakout. Define that for yourself. We don't know what's best in your eyes, but you need to know what's best in your eyes. What's going to give you that quick rule of thumb ability to say, yes, this is what I was looking for. That confirms my view. Now I'm going to use that to add to a winning trade in the belief that now I've got a continuation move. So ultimately, that's on us individually as traders to define that for ourselves so that we can make that process nice and simple in the moment. Really hard to do if you're not thinking about this consistently and planning this process out. Rachel, we heard from traders wanting to hear about look at the financials. The financials have been absolutely beaten up here. Now, similar chart situation, except when you look at the financials, Rachel, the standout here is that RSI did make a new low. We had a wonderful match down here, but that is an ugly new low. And we've had a 50 cross the 200 to the downside. Our trend on financials is not great right here. Should bulls be cautious given what we've seen with this move?
I think a lot of the times when you see this type of scenario, bulls may be a little bit more cautious in this type of environment. We're obviously pretty extended from that 50-day, from that 200-day. But I think the notable thing here is that if you look at that horizontal support, probably right around that 850 or so, or I guess that
Okay.
old horizontal support, I should say, old support, new resistance.
Yeah, I know what you're talking about. Right in
Right
here.
around that zone, yep. So that was a top that completed much earlier than the tops that we saw in technology and in the overall market. So this was almost like a leading type of sector to the downside in this case. So I think it's notable that, like, hey, we're at further lows in this. We haven't really seen too much of a bottom really take shape here. Like, we saw a little bit more of like a consolidation firming up in technology, maybe a little bit more of a consolidation firming up in discretionary. But we're not seeing that too much quite yet, even though we are looking like we have a little bit of a hold here at these lows. So I think the thing that we will be looking for is to really reclaim some of those prior levels that you drew out there, Kevin, for bulls to wait to get a little bit more aggressive in this type of environment.
I think so as well. Again, we'd love to believe that low will maintain, that's a good short-term low. That does, just because we don't have the bullish divergence doesn't mean it can't happen. Remember, these are all just potential probability leans, right? A little one way, lean a little the other direction. You don't have the bullish divergence, but that doesn't mean we can't validate perhaps that low that we just made last week as short-run support. Some traders could easily position themselves if they believe that this is good support that can maintain. The reminder is that whether it's an RSI divergence, a MACD divergence, one way or the other, or a lack of a divergence, Rachel, they don't signal anything 100% of the time. That's a good reminder, because we traders, we tend to think, oh wait, that worked last time, therefore it's going to work this time. That's not technical analysis, unfortunately, is it?
No, and I see Dragon Rider put in the chat, I believe it when I see it. And
that I love.
That's a good mention there, because when we see it, it shows up in the price, and price is the number one thing that traders should and are focused on, is just the price.
So, Rachel, let's we got about 7-8 minutes left. I know it always seems to go so fast, but I wanted to make sure we discuss precious metals. But before we do that, I wanted to lead with the dollar, because it seems like the move higher in the dollar has been depressing precious metals. So the dollar move has been pretty substantial, most notably when we got this one over the last couple of weeks, basically the month of March, which coincides with the conflict. So we've seen the dollar rise into resistance, and on the heels of that, and again, we're using these future symbols, but not encouraging you to trade futures, of course. We're just looking at them from the standpoint of price levels. Let me lift my my Fibonacci retracement draw here real briefly. I got to call that out, Rachel. That's about as clean a test of the 200-day on the gold future as you're going to find.
Yep, I was looking at that chart just this morning as well. And it's been quite a drop to the 200-day, because we can see how extended we were from gold at the highs, and now finding support almost here at that 200-day with this very high wave looking doji candle, which may tell us, hey, if we see some follow through tomorrow, could be a reversal candle. This is our indecision candle possibly, and that happens on the tails of momentum just finally reaching those oversold levels as well. So I think the biggest thing is going to be follow through tomorrow, but I think it is notable that as the index is seeing a little bit of a bounce, gold is finding a little bit of support, since that's supposed to be our quote unquote safe haven. But like you
Right.
said, you kind of read my mind with the dollar because I don't think we could have a discussion today about anything unless we look at the dollar, which is obviously over the last couple of months putting pressure on all types of risk assets. I mean, emerging markets, US equities, gold and silver, even the miners as well. So getting a little bit of a pullback from those levels of resistance right around that firm 100 level is possibly like what this market needs and what to fuel that a little bit of a rally. But yeah, this may be kind of that crucial level for metals, so to speak, at these levels near resistance.
And then let's use the last minute here. Make sure we touch on silver. Very different viewpoints, though, Rachel. When we think about gold and silver, the difference is one's precious metals with no commercial opportunity, whereas that's gold, where silver is used both commercially as well as a precious metal. But it feels like the move we saw in silver was much more FOMO based than anything else. There is practicality involved, obviously, with silver, but only when we bring the narrative around AI back to the table, perhaps. A little bit of a discussion topic there for you as it relates to gold when you think about silver.
Yeah, so like you said, gold is more of like that currency type of feel. Silver is more of its like higher beta type of alternative. So when you see gold kind of kick into high gear, gold start to outperform, silver starts to do that a little bit more, and it's obviously more volatile with that higher beta. So the drawdowns, the upside and the drawdowns can be larger in silver, but we're finding support right here at silver, right around that horizontal level, not even making it to the 200-day quite yet. But yeah, it's been quite a drawdown from those highs there for both the precious and industrial metal.
All right. Now, last thing that I wanted to touch on today with you, Rachel, is natural gas. And the reason that I wanted to do this was because actually it ties to some upgrades in this space. So first of all, quick look at nat gas. You're not seeing a huge move at the moment any longer. And we had this extended move at the end of January. We've basically come back into a real solid range. But two companies in this space were upgraded this morning by Morgan Stanley, one of which is Cheniere. LNG has seen a pretty fantastic chart here, which, Rachel, I'm going to let you speak to, but I wanted to mention that they were upgraded by Morgan Stanley to overweight from equal weight with a target at 313. That's a nice boost up from 236. Reminder, these targets are never a guarantee to be achieved, but the statement is that the upgrade follows the damage of Qatar's liquefied natural gas plant in Ras Laffan. Expansion delays there create a large LNG shortfall this year, mitigate oversupply risk in both 27 and 28. And similarly, the same conversation applies to Venture Global, VG. And you'll notice, Rachel, these two charts are very similar in nature within the LNG space.
Definitely. So, and these are actually both that I know you and I have looked at before. LNG, I covered that actually this morning on Morning Movers, and I kind of pointed out that, hey, with that LNG, if you draw a Fibonacci retracement from October highs to the lows that we saw there in December, you'll see that we saw price really taking, profit taking really around that 200% level or so. So we saw profit taking pretty close to that. I think yours is missing from this chart, but
Did I miss it? Peak?
yes, but right now we're actually at another Fibonacci level there that isn't really shown, but I think it's notable here if price really firms up right around this gap area where this gap doesn't get closed, this may give traders another opportunity to still get in at a certain level of a pullback in this trend, because obviously with a move like that, you're going to need a little bit of a breather from price, but momentum still remains strong here in this one.
Good reminder. You mentioned your market movers hit. That's such a fun, quick morning hit. That appears on the Schwab network, which of course is a separate but affiliated company owned by the Charles Schwab Media Group. Everybody. So if you're looking for that, you'll find that, of course, in your down below here as one of those areas you can access. Right. You can watch the Schwab TV. You can watch Trader TV, CNBC, what have you. It's all there for you here in Think or Swim. Rachel, as always, a really great discussion this morning. Love having you on. We get you once a month, but it's always a pleasure. So thank you for being here. Thanks for sharing your thoughts and your insights.
Yeah, thanks for having me, Kevin. Always great to join you. So fun.
It is. So big thanks to Brent Moores in the chat, and thanks to all of you for being here and participating in the show. We always appreciate that. Follow us on X, everybody. Make sure you're subscribed to the channel. And if this discussion was helpful for you this morning, we'd appreciate it if you hit that thumbs up button down below for us. We get these reviewed and archived for you as quickly as we can, and that thumbs up will absolutely help us out in the YouTube algorithm. So we hope you keep it tuned here to the Trader Talks page. I will be back for trading a smaller account a little bit later this morning. I hope to see you then. Have a great morning, everybody.